US 30-year fixed rate mortgage
I've tried to gray them out over here. I want to keep them as future special masterclasses that we do, but I'll just tease you a little bit. The next one's about finding and developing personal edge. So that's also nice. It was a really cool topic that we can dive into. So my next step then on this mission to build you the best masterclass ever was to drill even deeper into this topic of pre-market analysis. And the questions that we got were also really good and really interesting. Things like, how do you determine market context? How do you build daily narrative? How can you tell if a market is like to be balanced or volatile? Awesome questions. And in today's session on the Axia pre-market blueprint, which is what we've called it and what we've put into it, we're going to be covering things like, how do you prepare before the market opens? How do you define areas that you want to engage with in the market and areas that you want to avoid? How to create if-then type of scenarios with triggers and areas of invalidation, how to recognize low opportunity days and know when to stay out, and a whole lot more. These are going to be based on methods that Richard, it's like his second nature to talk about this stuff, but it's stuff that's been really proven, developed, tried and tested on London's professional trading floors, way back on the early days of proprietary trading, all the way through to today, where our team has really grown. It's grown larger. We've got an office here in London. We've expanded to Cyprus and other offices that are opening around the world. So these methods that you're learning have been really tried and tested. And Richard, none other than our head of training at Axia, is here to kick things off. So I'm going to hand over to Richard. Are you there with us, Richard?
I am indeed. Yes. Well, yeah, welcome along to the end of year special, I guess you could call it. Yeah, we're going to cover these questions. We're going to get these answered for you, or at least show you a bit of what we do, how we get to the point of being able to say, yeah, this is what I think is going to happen today. So a few of the questions, and what I'm going to do is try and roll through and answer some of the questions. In some cases, simply with an answer, with an explainer. And then in others, we're going to actually go and have a look at a couple of examples. We'll actually look at an example of what I said about the S&P yesterday. We can go and have a little look at what the S&P is doing currently today as well, and how you would then adapt your ideas and your hypotheses, your biases for the day ahead. So we'll cover that a little bit later. But let's get started off. I'll quickly share my screen. Here we go. Right. Hopefully everyone can see my screen. And we're going to go and crack on. Yeah, one of the questions that came up, how do you tell if a day is worth trading? Now, the simple answer to this is that every day is worth trading. There's no point, and I think a lot of the time what people are basically asking when they ask a question like this is, can I come in, look at what's going on and decide whether to bother or not? The thing is, you don't know what can change on any given day. You don't know what new piece of information could come up, whether a market might do something that perhaps is not that expected, and that would then lead to more opportunities. So every day is worth it. The question really you need to be asking is, how much are you going to participate today? There are some days that, yeah, I think a lot of traders will look at and think, do you know what? That's not going to be a great day. And you can tell these things ahead of time. You can look and think, yeah, this looks good. This has got a lot of opportunity in it. Yesterday in the S&P, I think, was prime example of it. More so than today, despite the fact today has some pretty decent bits of movement. What you've got to remember is that a lot of trading is ultimately sitting on your hands. It is like going fishing. You can't make the fish come to you. You can pick certain days where perhaps there may be a greater chance of catching fish. But if they don't come to you, and if the opportunity to catch fish doesn't arise, you can't just jump in the river and try and catch a fish that way. You can't force these things to happen. So what you've got to ask yourself in terms of deciding whether a day is worth trading is, firstly, do you know what your edge is? Because if you don't really know what your edge is, it's very hard to know whether anything going on is going to align with your edge. And if nothing's going to align with your edge, there are no trades. And the way to do that is to ask yourself, what are my expectations for the day? What look reasonable scenarios that could happen for today? And then it's a question of asking yourself, well, where does your edge come into play? I've said this to a lot of traders. I've said this to a lot of people that I've trained over the years, right? I think my technical analysis is pretty solid. There's no point in pretending that it's not. I think it's pretty solid. But as a trader, what I discovered pretty early on in my career, and this has always followed through in my career, has been that whilst my technical understanding suggests one thing, my actual trading aligns much more with shorter time frame stuff, with smaller moves, but smaller, quicker moves and more trades. So there's one thing to have an understanding of what you think is going to happen. There's another thing to then understand where your edge is and where you can apply that edge. I have just seen a comment that markets are selling off. Yes, they are. This is a bit of a change. I don't think there's any obvious catalyst for this either. So this is, one of those things that have changed. And this is where you have to ask yourself, right, well, with markets currently selling off, does this match my expectations for the day? And do I have any edge in a situation where markets are moving and I'm not entirely sure why they're moving? Because whenever you have a situation like that, whilst, yes, it might look quite enticing to jump in, you have to sort of look at, well, if I don't really know why they're doing this, I can't jump in because I have no idea whether they're going to keep on going or whether they're not. And very, very quickly, I just saw a question there. Is edge the same as strategy? Absolutely not. A strategy is, and I don't think this is to do with option expiry, Justin. That's the easy answer. That's the, oh yeah, it's option expiry. You're never going to be able to prove that. So we'll discuss those types of things in a moment as well. But the point here is, if you've got no edge in this situation, it doesn't matter how far the S&P falls. There's nothing that you can do here. Edge is not the same as strategy. A strategy is basically a way of doing something. So your edge can't be in your strategy because the strategy could be copied. I speak to so many traders on a day-to-day basis. I've built loads of strategies myself. Anyone can copy a strategy. That's not an edge. That's just a method to do something. Your edge comes in knowing when to apply it, knowing how to apply it, knowing what your risk management is. And everyone's got their own edge, and your edge is really to do with what do you do better than everybody else, whether that's your analysis, whether it's your execution, whether it's your ability to change mind. You've got to work those things out. That's part of what we try and sort of train people to do, to understand really truly what their edge is. So every day is worth trading. Arguably, a day like today, where we've had this straight up, straight down, may not actually be as valuable a day as, say, yesterday, where arguably it was a little bit clearer. And that can be a situation that you come across. One of the other questions we saw was about bias versus prediction. Now, there's quite a simple distinction between the two. Bias has conditions, right? So to have a bias does not suggest that there are no alternatives. It suggests that you favor something. You call it favoritism, whatever you want to call it. In a sense, it's like certain foods, for example. You might be biased towards certain types of food because you like them. It's just not the way you describe it. There are alternatives, and these things can also change, right? What bias tries to say is, I think there's a reasonable chance that we're going to open here and we can close here. And that's your broader bias. As long as certain conditions are met, you think we're probably going to close higher. You're not specific about where that close is going to be either, but you're probably looking at a range of prices that you expect it to be. Prediction is different. Prediction is a really dangerous thing. And if you've seen all sorts of things where people predict stuff, the chance of you being right on a prediction is very, very low. And the reason for that, particularly in trading, is that you've not only got to predict direction, which is hard enough on the face of it, but you've also got to predict a specific sequence of actions. The other thing with prediction is it assumes that there is nothing else that could happen. Because if you're predicting the market to go up, you have by default suggested it will not go down. And there has to be conditions that say, actually, it can go down, and this is why it might go down. And this will be a scenario in which it will go down. You never want to predict. You always want to have a bias. So you can say, right, because of this information, I think we are likely to move here. If this information changes, or if for some reason I have differing information, then I think the market is going here. You can have a favored bias. You can prefer the idea of market going up. And this is a conversation I have with a lot of people, that there's different ways that you can look at things. You can have what you think is the most likely outcome for the day. That's a bias. That's what you think is most likely. There's then a preference, and the preference is for what would you like to be trading? And what I'm trying to get at there in the what would I like to be trading is understanding where I actually think there's more of an opportunity. Bias wouldn't make you hold losers for longer. Prediction makes you hold losers for longer. Prediction means that when you get in here, because you're absolutely certain we're going to close here, you hold and hold and hold this. Now, if that keeps on going and it does this, well, where do you get out? Because you predicted it's going up. And until the end of the day, your prediction is still valid. With a bias, there is an invalidation point. That's the key bit. So any bias, there is a point that says, no, this is not going to work anymore. And so therefore you need to be out of that trade. That's the key difference between a bias and a prediction. So how do you develop a bias? How do you develop clear or a number of biases, what I would call hypotheses? And I'm going to come to that in just a moment. One of the questions that we got asked is, what's essential in your prep? What have you got to make sure that you've done when you're prepping to take on a day, to take on any trades? There's a number of steps to prep. First, technicals. Start with the technicals. The technicals lays out the landscape, right? The technical sets out what you think could happen today. The fundamental situation, so this is your news, incoming news, news that is likely to come out later on in the day. This adds color to the technicals. Ultimately, if a market is set to rally, unless there is very, very clear game-changing fundamental information, it's still likely to rally. All that the fundamentals do is either limit or accentuate what technically a market was looking to do already. What you're then looking at is developments. At what point can you be confident in a certain directional movement? At what point is news likely to hit, data that is coming, CPI today, for example? And what do you think the impact of that will be on markets? And then finally, what are your executable ideas? This is all well and good being a great analyst, getting your technicals nailed on, understanding your fundamental situation, understanding where changes can happen. If there's nothing you can execute, and one of my favorite questions to every new trader is, where's the trade? If there's nothing to execute, all you've done is some nice analysis. That's great. I'm not suggesting you shouldn't be doing that. Good bit of analysis, wonderful. That's the kind of stuff you want to see. But you've got to action that. It's got to have some action. The key to doing good prep is consistency. It's asking the same questions every day to make sure that you're always considering things in the same way. It's going through the same steps as well. So for my technical situation, I have clear steps that I go through. For my fundamental situation, I have clear steps that I go through. The point here is to try and be objective. It's to try and control the things that you can control, the controllables. I'll give you an example. For a technical prep, I start with a daily chart. Now, I'm not looking at a daily chart to formulate a bias. The daily chart just starts me off. So if I give you an example, bring you in an S&P daily chart where we are at the moment. That's your S&P daily cash session chart, right? So what I'm looking at there is, where have things changed? Has anything changed that gives me a broad directional bias? It doesn't give me trade ideas. It gives me a broad directional bias. Now, I would look at this and think, right, well, we've got a bit of a range above up here. This was the recent sell-off on the post Nvidia day, post payrolls, and then the rally back. So this was then a phase where we're in a consolidation. This could continue up. If we break that consolidation down below sort of 68.50 roughly, we've got the scope to go down. So on the very basic level, we've got a slightly bearish bias. Yesterday's candle was rather bearish. The volumes were not wonderful, but they have ticked up a bit. Ranges were okay. They're the questions that I want to ask. I want to know about ranges. I want to know about volumes. I want to know, right, where's the key reference on the upside? Where's my key reference on the downside? So that I've got kind of boundaries to work within. That's all I'm trying to take from a daily. I'm not gaining loads from a daily chart, but I just want to make sure that, you know, if we go back above that sort of 68.50, 68.66 area, then things change and things do start looking like they're going up, for example. I will then move that down to an hourly chart. I will then move that down to a profile. The hourly and the profile combine to give me a sense of the scope of movement for the day and what I expect to happen. And then a 5-minute chart, which tells me where exactly I want to take trades. So let's go and have a little look at an example of what I'm talking about. And this is what I call hypothesis development. Every day you develop 3 hypotheses. It's easy on the face of it. One goes up, one goes down, one goes sideways. That's the essence of it, right? So what you're trying to do is you're trying to work out, well, what could happen today realistically? We're not looking at sort of fantasy ideas, you know, like aliens land or new discoveries, whatever it is. We're looking for what technically could happen today. Set the framework for the day, basically. What's crucial in developing a hypothesis is, for any idea that you have, there needs to be what I would call an in-play point. At what point is one of your ideas now in play? At what point do you think, yeah, it's now likely to be this one? Equally, they all need a line in the sand, a point where you can say, this idea is dead now. It's not going to happen. There's no point in looking at this. And then finally, what you've got to look at then is how the day develops. Because there's no point in doing prep and saying, well, I think this is going to happen. And then something slightly different to your prep happens. And then you go, oh, I don't know what to do. You need to then update. And in updating, or in order to update, what is really, really key is to know your day shapes or your day types. Quicker you can identify what the end of the day is likely to look like, the quicker you can work out what to do now. Often the early stages of a day are the part of the day where you have the least clarity of what's going to happen, but also the most scope for action. That's one of these kind of paradoxes in trading, that where the most opportunities are the points where you have the least clarity. The points where the least opportunities are where you have the most clarity. Frustrating. So it's about trying to navigate the day. Now, in order to do this, I thought what I'd do is I'd actually show you a bit of prep that we did yesterday. So a brief sort of suggestion or a brief look at the prep that I did for the traders, members of Axia, traders on our floors, of what I thought was going on for the S&P yesterday. Now, I believe Craig is going to just pop up and share that because I had a little bit of an issue trying to share that on my side. Here we go. Craig's back.
All right, let's see.
And it's only 2 minutes of me talking a different scene, but it then sets the stage for how we're going to go and look at developing a sense of the early action of the day and then being able to update your expectations on what is happening for the day as well. Tony, who's just joined, yes, you can watch this from the beginning. We'll send out a replay. So you can't rewind right now, but we will send out a replay so you can join in on it.
Richard, I think you just have to stop sharing your screen if you haven't already.
Okay, right. I'll stop sharing for a moment.
Okay.
Right, here we go. I can see your screen, Craig. All right, good.
Okay.
This has run nice and smoothly. There we go.
Tell me if the sound comes through.
Big question today is whether...
Yeah, is it coming through?
Sound's coming through. A little bit on the quiet side, but it is coming through. This, and we're now trading at around about 80, still around here. Does this constitute a drop out of range and a rejection? And now the move back up. Small range to 69.25, big range to 69.87. Is that what we're now looking at? Sorry, 69.67. Is that now what we're looking at? Or is this a bit of a false dawn bounce in the overnight session? Key to that's going to be 56. 56 is just below the bottom of the range. The bottom of the range is 66. 56 is just in here. So you see where these highs have been formed before this overnight drip. It's also VPOC and close of yesterday. Really, we're kind of stuck with this situation where we're in between, or depending upon where we open, may not be, but between about 55 and 85. You've got VPOCs, we've got volume here, we've got volume here. Above 85, not only have we got back inside the range, that's why I was going over here, got back inside the range, but also we have rejected all the volume down here. We've broken through at least one of these days worth of volume here. And that then opens up the move back up. Bearing in mind that these 2 days are liquidation type of days. So they don't offer that much resistance on a bounce back. So 92 is going to be your key point there. If we get through this VPOC, this VPOC top of value comes in at around 92. Once that's gone, then you've got to be looking towards 25. On the downside, as I say, 56 is the key bit. You know, it's easy from a chart to look and think, right, 66 is my level. That's where we're going to bounce from. 56 is still a significant reference. And as long as we stay above there, we can still move to the upside. Break of 656, you got a fair chunk of volume just in here that formed yesterday's value area. We could well see a sweep and an attempt at 17 and then beyond down towards prior VPOC and the beginning of this breakout over here. So a little bit of perhaps waiting to see as we get into the open. You know, where we open could be pretty significant for today. So eyes on where exactly we do open. Right. So there we go. That was my view on the S&P from yesterday. So what I thought I'd do now is look at well, how do we turn this into some executable ideas? Because that was the kind of prep. Now, yeah, for the traders that we've got in the office, yeah, it's up to them how they're going to actually decide what they're going to do with that, right? So let's turn this into something something that we can execute. You can take trades in the overnight session, Mohammed, absolutely fine. I'm just really talking about, you know, if you want to give yourself structure for a day, going from opens of regular trading hour session gives you a very clear way of structuring your day out and formulating ideas. So in terms of trade ideas then, on the upside, we still got this quite tricky zone. And that tricky zone is between the previous day's high, VPOC, and also this VPOC and low over here. So that's 79 and 91. Now, as I said, if you can get through that, the upside is absolutely there, and you're looking for a reversal of this cash session. So just for anyone who's unsure what my charts are showing, the smaller range profiles, so the smaller sort of dashed boxes, are your RTH sessions, and the wider are your ETH sessions. So that's what we've got there. So what I'm looking at here is the fact that we've got a reasonably tricky upside move, because we could get a little bit stuck in here. We may find resistance at 79. We may find resistance at 91. And in both those situations, we could fall back down or we could continue. So if I want to play an upside move, I want to see it above 91. Once we're above there, then I'm happy to play that. So I'd probably be looking for more of a movement that would come up, trade through this area, and then give me a structure to buy it here. I don't really want to be just trying to buy it as soon as you're above 79. So what I'm trying to do is take a bias, which is for the move up, if we can get through here, and then work out, well, how am I actually going to take that trade on? It's not prediction. I've got no idea whether we'll get there or not. Then I don't want to try and predict that. I'm looking at this and saying, right, if it gets there, I don't want to get involved here, but I do want to be involved here, or on a failure to stay in this zone and come back out. Downside is reasonably straightforward. If we can break through that VPOC and you've got clear sort of support resistance zone here, if we can break through there, because of the fact that we're already in a downtrend anyway, and you're going against people who have positioned long in the overnight session, this has got far more scope. You can be more aggressive. You can be quicker to get in to try and play this down through the low of the overnight session and down towards the previous day's low. How far beyond there it goes is a question of the way it's trading when it gets there. So in the early stages, I'm looking at this as a potential trade as well. If someone said, what would you prefer to be doing? Absolutely, the downside would be my preferred trade. It's clear where I want to be in. I've got clear targets. I've got an expectation of quicker movement. It's also continuing the direction. So the sort of the trend's your friend trade. On the balance idea, if we fail to get below 56 and we fail to get above 91, then we're probably looking at a day that chops somewhere in here. That's probably not the day I really want to see. But if it does give you a reaction there, then there is potentially a trade to be had. At the moment in the S&P, I think we're very much looking at that as a scenario. The S&P so far today has traded up to yesterday's high, back down to the top of value from yesterday. So down into here towards 16, and we're now starting to bounce back. This to me looks like an absolute classic balanced day where I'm expecting now much of the rest of the day's trade will be done somewhere between around about 56, maybe as high as sort of 66 area, just in here, or even 64. And probably not dipping much beyond here. That's my expectation. So they're my lines in the sand. As long as you're below 64 or above 16, then I think you can keep playing this back into the middle. That's my view at the moment. Doesn't mean it can't change, but there's no reason at the minute for me to have a different view. Yeah, absolutely. I want to try and break up my zones and define whether I think that there are good opportunities here or bad opportunities. Again, you've got to work out, does this play into your edge? If you're not a breakout trader, if you're not someone who likes a fast breakout, being aggressive in your entries, this is probably not the trade for you. If you're someone who likes a sort of slow and steady reversal. You're hoping for a day a bit like that. So you've got to work out, just because you can see what could happen, there's still that question of, does this suit your edge? Are you actually going to be able to make anything out of this one? So early identifiers of action then. So what you've got is hypotheses. Now we got to work out, are these in play? You need to know from your hypotheses at what point you're in play. Then you've got to know what you need to see to execute the trade. So for any trade you're going to do, there's got to be clear criteria that says, I need to see this and then I'll get in. Once you've got that information and you've got a clear stop and you've got a clear target, execute the trade. You've done all the work. There's no excuse not to. Right. I've just seen a classic question, which is, this is all part to do with. I get a level that I can be both good buying or, in case of failure, a good sell. And that leaves me very confused when the market tests a level. What you have to do there, and this is what I call not having your cake and eating it trade. You have to decide. You can't do one or the other. Look at that example that I just suggested. I could look at that and say, well, 56 is probably a good buy to play the balance day. 56 is also a good sell to play the breakout day. I've got to decide as it gets there what I'm going to do. And the answer cannot be buy or sell. It's sell or nothing is one idea. And the other idea is buy or nothing. You can't do both. So for me, I would look at that and think, my edge is in playing breakouts. My edge is in reading order flow for these types of trades. I'm going for the breakout. The order flow is either going to tell me do it, or it's going to tell me don't do it. If it tells me don't do it, I'm not going to do anything else. I'm going to leave that alone and wait and see if it provides me with a structure to play it differently. That's how you do it. In terms of identifiers then, right, what I'll do, I'll come and try and answer some of these questions after, because I think we're going to get into sort of super specific things. Levels don't have to just come from RTH sessions. The overnight range is really, really useful. The overnight range helps you decide what you're going to do. If the overnight range is non-directional and inside the previous day's range, then straight away this tells you you probably want to wait. If the overnight range is very directional and creates a gap, then that's providing you with two opportunities: the reversal trade or break of the overnight range and continuation trade. Value also does the same thing. Opening inside value, wait and see. You don't need to rush to do things. You don't need to rush to conclusions. If you open outside value, you may well have an early direction. I'm always looking at regular trade now as ranges. And then I've got the initial balance to try and build up my sense of what is going to happen next. So let's go and have a little look at an example of this, right? So this is the reasoning behind, or the execution of, yesterday. So as I talked about with yesterday, key area for me was that 56 zone. So that is the little red box, basically. I'm bringing it down onto a 5 minute. I'd bring it down onto a 5 minute to recognize where exactly the market is trading around 56. Because if I'm going to enter, I want to be clear on where my stops are, and they've got to be above this little red box. So I'm looking at this thinking, right, well, this is the initial balance. We've had so far what is relatively choppy. We've also opened inside value. So this is a bit wait and see. So we've opened inside value. Overnight range has stayed well inside the previous day's range. Previous day of the overnight low is 35. Overnight high is 82. So that on the profile from the previous regular trade now is its value area low and yesterday's high. So we've got no break, but we are trading below 56. So we've now got a situation where we've got a small initial balance. Small initial balances suggest scope for directional movement. So straight away, I'm now thinking there's a chance for a sell here, break of the IB. That's the trade I want now because we've got directional initial balance, albeit it is choppy, but we've opened, we've tested outside of value, failed that and dropped. We've got a small initial balance, which suggests continuation. And seeing as we're below 56, continuation is likely to be down towards 16. So I've now got the stage set. The next question is, what do I need to see? Well, what I need to see is volume coming into this one. I need to see some speed. So this is where you get onto your ladder. And the point now is once I've established what I want to be doing, well, I don't really need to be looking at my charts. I know where my level is. My level is 41.5. I've also got this interim level at 46. So these little lows here come in at 46. So the idea now is that as long as we're below 46, we've got scope to keep on going down. So you're looking to enter on a break of 46. But the main entry I'm interested in, and the point where I want to see action, is at 41. This is where I want to see the pace pick up. If we get pace picking up on a break of the initial balance, I'm now pretty confident that we're going to break 35 and then we're going to go and break 16. So you want to be ready at 41, ready to add on to this trade. The advantage of getting a small position in early is when you add, it doesn't bring your average price down so far. If you're adding now, or you're getting in now, your position's average price is going to be here. By having that earlier add, my average price is now still above the IB low. So in a nice position now, this is where the prep comes in. You've planned this. You expect that we're going to go through the overnight low. And on the break of the overnight low, you're breaking through value. In doing that, we're going to 16. So the plan is there. You've expected this pace. You've got the pace. You've also got the light volume just here. That is helpful because that allows you to position a stop. So we've now got a way of placing a stop. You can place a stop either, if you want to be tight, as people call it, back above 41.5, back above this volume. So place your stop about 43. Or if you want to be strong on your stop, you could place it up about 47.5, back inside of this range. So now you're set, ready to go and waiting for this move to happen. So once you've got your position on, now it is just a case of, right, you've got your stop in at 47.5. We've got the position on. Let the trade work itself out until it gives you reason to get out. Yeah, another failure at the overnight low maybe could give you reason to reduce position. Till it gives you that, there's no reason to exit this as a trade. So that's then bringing that bit together. The next part of it then is updating your prep. This is the question that we asked right at the beginning. Was yesterday a liquidation day? True or false? Yesterday was a liquidation day in my eyes. And the key to working this out is once we broke down out of the IB, which was here, the move was quick. The move went on high volume. These are all characteristics of liquidation moves. It creates a large C print, single print, and then volume starts to move down quickly. These are classic signs of a liquidation day. So once that's happened, I'm very, very confident now that throughout the rest of the day, we're probably not coming back above 16, but we're also not going to extend dramatically to the downside. So on that basis, any opportunities to sell pullbacks to around the 16 area look like good opportunities. But I'm going to be playing these to just go and break the recent low. I'm not looking for this extended sell-off that I was initially, because the range now is likely to just rotate up and down. This all comes down to your understanding of profile. All comes down to your ability to recognize the early clues and know what that then leads to for the rest of the day. So that's how we do some prep. There's a fair bit that goes into it. It's hard to give you absolutely everything. But to cover a couple of those questions as well, before I hand you back over to Craig, I don't make a distinction in Globex session between Asian and London. I always look at regular trading hours ranges. Is it wrong to think that single prints are more susceptible to fill, which will invalidate the trade? No, you've got to take the situation as it is. Liquidation days don't fill single prints. Single prints can fill the following day, but they don't fill on liquidation days. So on that basis, I would not be looking for this to fill. That would be to suggest that you're going to see a very strong move down and assume that we're going to go back up. I'm always going to be looking at this thinking, well, we've broken recent lows. We've done it with a fast breakout. Sellers are in control. Why in the world do I want to be playing against this move? Absolutely, Mohammed. Yeah, that's the goal. You plan your trades out, you structure where you want to be involved, what you expect to happen when you're involved, and then you get down onto your shorter timeframes, what I would call my execution timeframes. 5 minutes, 1 minute. That's how I'm going to do it. I spoke to Craig earlier about what I thought was going to happen for the day. And I actually said, well, one scenario for me for today is that we are going to balance somewhere between around 64 and 16. Now, we did extend that slightly to the upside. Just here, we reached up to 72. But if you're looking at this from that perspective, yes, quite possibly you're going to lose if you sell 64. Because once it's above 64, you're thinking, this probably isn't going to work. But on the 17s, there was absolutely an opportunity there. And this is, like I say, where I'd bring it down onto my execution timeframes. So the early stage of today, we're opening in an area of uncertainty for me. It trades down, we trade up, we trade back. I've got no idea where we're going there. I don't want to be getting involved in that. What I'm interested in is 56 again and also 64. So we break 56, that gives us a move up. We then put in this sideways range. So I think at this point, if you were selling 56, you've taken a loss. Once you fall out of this range, though, we're now realizing that this is not the continuation. It's a move back inside the initial balance. And a failed break of the initial balance, you typically trade to the other side, which is down here. Now, the point I made earlier about, is this where your edge is? If it's not, you still don't have to do this. For me, the better opportunity was down here. Down to 16. We had a little ledge from yesterday down at 12. It forms, in a way, a sort of mini inverse head and shoulders. But crucially, once you bounce back above 16, we hold the level. That's the point where now you play it back to the middle. The middle, because this is looking like a balanced day. I can't guarantee we're going to get back up here. We maybe get here to 60, but I think this is probably a balanced day. So for me, this is the opportunity, buying it down here, playing that move. I don't need to be in this bit. I don't need to be in this bit necessarily, but that to me is the clear trade. So that's, the sort of execution side of it. This is going to be a different trade to the one I just showed, because it's going to be one that I'm going to wait for it to drop down into and then play back up. So it's a reversal type of trade. So there you have it. Higher timeframes define where you can go and what you want to be doing. Lower timeframes define where precisely your trade is, how you enter it, what you expect when you're in it, and also where your stops can be placed. Is it because it has the highest probability? Well, it's what I perceive to have the highest probability. Yes. Alessandro, on the whole, no, I don't think RTH necessarily leads into Globex that well, apart from when you get very late sell-offs in the RTH session. So there we go. That's a simple answer to that. I will bring Craig back on. It is Christmas, so we've probably got a further Christmas present for you. See you in a moment.
Yeah, indeed we do. So if you've enjoyed learning from Richard in today's session, give me a yes in the chat. Have you taken away something from that you can start using inside of your prep? Give me a yes. And if you have anything specific, I would also love to hear what that is. So, you know, what you've learned about from Reg, I'm seeing quite a few yeses there. Mario says effing yes. Thank you. Khalid, yes. Barris, Tony, Thomas, Ivan, Roberto, Ferran, Mark, awesome. Mark says excellent session. So yeah, Richard really does bring and deliver the goods. I'm glad you guys have taken a lot out of today's session. And something that really stood out to me is you can see how, you know, while you may have gained some insights into how to approach prepping for markets, you'll see that there's a wealth of knowledge that comes behind Richard when it comes to things like those early identifiers, just being able to differentiate between whether you've got a small initial balance or large initial balance and what the implications of those are, whether you're opening inside value, outside of value, what the overnight session has done. There's a lot of layers to your understanding of, in this case, market profiles that helps you get more proficient in the way that you prep. So as I mentioned, we do have a special gift for you. Okay, and because it's the holiday season, it's Christmas time, it's the end of year, we want to give you 48% off our 6-week career program. So you've spent just under, I mean, what is that? Like 40 minutes with Richard. This is 6 weeks. You can think of it as 6 modules where you have his undivided attention for these days and really diving deep into what we call the Axia methodology. So you've heard, you know, it comes down to profiles, and then what are you expecting to see at certain levels of the market? Then you turn to your ladders, your footprints, and look at the order flow and what's actually going on. There's your macro understanding, as Richard said, bringing color to the technicals, making that come to life. There's a whole lot that goes into becoming a professional trader that we observe the best traders on our floors actually demonstrate. And to just give you a quick synopsis or snapshot of what this program looks like, we've got week 1 is our foundation. And while you may see things like chart patterns and support resistance, which sound like beginner type topics, the way in which Richard approaches these basics is from a very high level, where it's like understanding where people are positioning and where they're having to stop out. And by understanding those pinch points in the market, it changes the way you understand things like support and resistance, chart patterns. You're actually understanding the mechanisms behind them and the positioning of what actually makes them behave like markets behave in and respond in the way that they respond at these, when you see these certain types of patterns. And that builds into your understanding of profiles, finding those places where, again, some of the best trades are where people are trapped in positions and are having to stop out. Richard teaches you the principles of market profiling, so you're able to have that more nuanced understanding. So you can you can produce quality prep when you're approaching the day. You understand different types of opens, how markets trade during, what the implication of is, say, like an open drive versus an open auction reversal. You know, there's different ways that a market can trade, and this leads into the way that you start developing your daily hypotheses. Go into order flow, how you then see the markets responding at the areas that you want to be interacting with them. We teach you order flow techniques. You know, like you saw that blip in the market when Richard pointed out that level. I think it was 43 or the 35 level. But as soon as that broke, you saw that snap down. You know, there's types of order flow patterns that come with that. How you're reading the volume accumulation on the ladder. So we go deep into that in week 3. Week 4, then into macro strategies. If you know anything about Axia Futures, this is where our team has a unique edge. It's really what has built Axia as a team, especially on the eve of Brexit. That's when we officially launched. If you want to hear more about that, you can check out our book, Traders of Our Time. You can read the stories. I was going to try to reach over to my book, but it's under a stack of books. I'm not going to be able to reach it and show it to you right now. But check it out. It's Traders of Our Time. It's on Amazon.com. Awesome book detailing the lives of our traders. And you hear about some of the massive trades that they took. There's some great tales in there about the year 2020 when COVID was going on, particularly if you read the chapter by the Warrior. But that's all built on macro type strategies. Routine, incredibly important part. You'll see that the way Richard approaches prepping for the market, it's a systematic, sequential approach. There's a formula. He's applying it consistently to produce consistent results. There are many layers to the way that you prep each day and you approach the day, that things that should be going into your routine and how you conduct yourself as a professional. So we teach you that. And this is, again, based on what actual traders on our floors do. And then you've got edge development, understanding the life cycle of the strategies that you're putting into play, how to develop your own strategies. Once you've gone through all that, you have what we call the Axia methodology. And anyone who completes this training, this is what we look for, people who've completed this training before they're recruited onto any of our desks. So we are opening up more desks. We often get questions about how do you join Axia? We recruit directly from our career program. So when we have spots opening up, having completed this, first people we're going to reach out to, tell them about that. We're also, anything about funding, this is where we source talent for our desks. And our prop arm looks to back people to complete this training. So that 6-week training is streamed live from London. It's with Richard. All the traders, as I said, who are on our desks first go through this training. The next training starts on the 16th of February. The sessions run from 9 a.m. to 1 p.m. UK time, 2 to 3:30 p.m. UK time. If you can't make any of them live, don't worry. The sessions are recorded and uploaded to our learning session, so you have access to them. If you can make it live, amazing. You can ask questions live in the chat. Richard will be able to answer you. If you can't make it live, as I said, we record everything. It's all uploaded. We've had students working full-time jobs, people tuning in from all corners of the world, where sometimes in the middle of the night, people make the effort to get up. But if that's not you, you can watch them in your own time, watch them in double speed, ask questions in our Discord community, which I'll tell you about in just a moment. And Richard always is prompt and giving you great answers and the type of guidance that you need. During the 6-week program, we give you access to a trading platform. So I think that is going to be Tradeovate. In the past, we've used Jigsaw as well. So there's a few that you'll hear about inside the program, but we do cover you with that for the 6 weeks. So you don't have to worry about that. Some more details there that I don't have time to go into, but we hear some comments from people who've just finished a program. Rafael, so this one I took the screenshot, it was a couple of days ago, but he said it's the best trading program he's ever taken. We've had Stelios completed. So he highly recommends the on-site training. And actually this coming training in February, it may be the very last in-house program that we do. And if you do the in-house program, we also rotate you on the desks, so you get some of that experience. So if that's something you're interested in upgrading to, so this one that I'm talking about today, this is the online version that's accessible to anyone around the world. But if you are someone who wants to be there in person, we do have a few places available. You can email us to find out a bit more about that. I'll tell you about that at the end. Albert says it's worth every single penny, and just other great bits of feedback that we always love receiving and reading. So the question, how much for this training? How much to invest into your training? Well, on our website, we sell this at $3,490. And because it's Christmas, because it's the holiday season, we're discounting this all the way down to one installment of $547 and then 3 monthly at the same amount. Or you can get it all covered and taken care of with $1,797 plus a 30-day money-back guarantee. So that's almost 50% off the regular price. Plus, we're adding in some awesome bonuses to go along with this. If you want to sign up right now, go to axiafutures.com/Xmas. I'll drop the link in the chat there. You can get it there. I'm going to quickly go through these bonuses. There's 7 of them. No, there's 8 bonuses. So first is our US Special Ops training for traders. So this man here, his name's Angus Fletcher. He works with the US Special Forces. We actually flew him out to the Bahamas to do a special workshop with our elite trading team. Angus has consulted with Warren Buffett's team, Renaissance Capital, Pixar. He consults to some special forces units in the US military, which are They claim they do not exist, but they do. And basically what he does is he takes the type of training that they use in the special forces, this elite unit, to basically apply it's like creativity and resilience type training. Like, how do you think creatively under high pressure situations? Especially when you think the terrain is going to be one way, you think you're going into a battlefield and things are going to look one way, and then when you get there, it's completely different. Very much like trading, where you have to think in the moment, you have to make snap decisions in a second, and it's basically applying the U.S. Special Forces psychology and techniques to trading. So that's what we did with Angus. That's bonus 1. Bonus 2 is our 8-day foundational fast start series. If you're someone who is new to trading, you've never traded before, you want to dive into something before the 6-week kicks off, this is a fantastic 8-day fast start that you can go through. We do have beginner content that's in a special library in the 6-week program, because the 6-week, it gives you a good grounding and then gets quite advanced. This is a great foundation if you are someone starting off fresh. Bonus number 3 is our fast track footprint training course. So no matter what, we get you up and running with footprint charts in 6 hours or less. If you've seen on YouTube, we have two footprint workshops with Brannigan, and they're titled 1 of 3, 2 of 3. There's a third one missing. You get it inside of this bonus, absolutely free. There's 9 strategies that are included in this training. Bonus number 4 is a journey from 3 to 300 lots following a trader in the book. This trader is called The Hero. You'll find him in Traders of Our Time. He is one of the youngest traders to make it to over 7 figures. In the book, you'll hear about how he blew up and then basically made it back again, his tumultuous journey that he went through. You actually see him on that journey in this bonus, trading from 3 to 300 lots, how he grew and developed as a trader. It's a blow-by-blow account of how a junior transformed. And the purpose of this is for you to have a reference, someone you can look to act as a role model that is growing, and you can almost grow alongside him. Then we have our Axia Discord community and market analysis. So this whole workshop today about how you prep, how you create your hypotheses, how you prepare yourself adequately each day, this makes that so much easier for you because we actually hold you by the hand in our Discord community. You have 3 months of access to this. Every day there are streams that we have where you get to see Richard doing amazing analysis, also another one of our coaches, Eric, and afterwards often they're sharing that information inside our market prep area on Discord. In this particular slide here, I've got an example of when there was a trade that was setting up in the gold market, and Richard actually broke it down inside the stream, then shared images inside our Discord. Is calling out specific levels when gold was breaking out, highlighting those levels for people, making them aware. And when it actually played out, you had that edge by just being in touch with the community. And ask yourself, wouldn't it make stalking trades like this, especially if you had them in the back of your mind, if you're already prepped for this, to see that confirmation from the community and have our coaches in your corner pushing you? Wouldn't it make it so much more powerful for you as a trader to be in a community like this? And then we have bonus number 6, and this is an exclusive software that our team has been internally developing. It's called the Axia Delta One software. Our traders actually use this as their ultra-fast news platform. It replaces Bloomberg, Reuters, and we're constantly adding new features to this. It's incredible, and you have access to it during the career program. This is our trader secret sauce. You can highlight headlines that are moving markets. We have automated news read, like AI voices, and when news comes out, we also have a squawk that's built into it. So you can expand some of these articles. You can use this for your prep to understand what's going on every day, what's moving markets, what a trader's paying attention to. So this is an old picture, but we have new sources that have come into this. We have a mobile app that goes with this. And plus, one of the best things is our position tracker. This is where you get to actually be in contact with on the trading floors and seeing the positions of our traders. So like I mentioned, that gold trade, if you were watching in our Discord chat that this trade was setting up, you had Richard and the team calling it out. You had prepped for it. And then you had the positions all opened up and you saw in the gold market, the spike in positions. You would have known that the traders had all gotten short in the gold market at this exact time and were exiting their positions at this time. Don't you think having all that information at your fingertips would make things like prep and the execution and confidence to act on your ideas, it would affirm the ideas that you had. Because sometimes you may take a trade and you lose confidence in the idea and then it plays out. But if you can actually have that feedback from the floor, it makes it so much more powerful for you and accelerate your development as a trader. So that's available for you. Plus, we're including a kickoff call for 2026 when you come back from the holiday season. You want to get back in touch with the markets. You're trying to prep for the year. Have a good outlook on what you can expect, how you can start refocusing yourself as a trader. There's a lot of great content that gets covered in our kickoff calls, and that's included. Then you have access to any one of our Edge courses completely free. So our Edge courses are all valued at £1,200. If you go to our website, that's what they are. We're including any one of these. You can pick it for yourself. Today, we've been dealing a lot with profiling, which is essential for market prep. There's some amazing bonus updates that have been added to the volume profiling course, where Richard actually goes through hypotheses every day, like showing you, here's a market setting up, here are the hypotheses, makes you go do the exercise. You come back and you check to see which one played out. And the ones that play out, you also get insights into some of the playbook trades that Richard looks at. So super powerful training. I could say a lot. I could say as much about these other two courses, the price ad and the footprint course. But then, yeah, we just don't want to go too much into detail, but you have access to our price ad course. You can choose that one, a profile or footprint program. That is our Christmas special for you. That is our special gift along with the special masterclass. I think I've said 7 free bonuses is actually 8. So I gotta just update that little typo there. But this is valid until midnight, the 24th. So just the eve of Christmas, you can grab access to this the special. I have dropped the link in the chat. Let me actually bring up the page just so you can see what it all looks like. But you go over here, and here you have your options. If you want to do 1 installment now and then 3 monthly at 547, or you grab the full thing for 1797 plus comes with that 30-day money back guarantee that I mentioned. And you select your Edge course here. If you want to take the price adder course, you select there, profile, fill in your details. You see the timer is set until six days from now, so you have some time to do your Christmas shopping. And here we have some frequently asked questions, and that is it. If you have any questions, particularly about upgrading, say, to the in-house program, you can email us at info@axifutures.com. And the bonuses, especially the on-demand trainings like our US Special Ops training, Journey 3 to 300 lots, these you have lifetime access to. And the 6-week career program, there I think by default, the training area is set to 3 months. And anytime you want to refresh it, like an add on another, you just let us know and we just extend it. But it's designed for you to complete this training within those 3 months. But as I said, you can always extend it. So it's effectively a lifetime access to that. And yeah, and then if you do want to continue access to our Delta One or our Discord, you just email us. Actually, at the end of the career program, you'll be given an option to continue at a monthly rate. It's like it's under $100. It's amazing software and the community to be a part of. So, if you have any questions, you can pop them in the chat. If Richard is still with us and he wants to say any departing words, I know that we're actually closing our office after tomorrow. A few of us will stay online just to be part of support, like for customers and people inside the students inside our training area. So you can, if you have any questions, let me know in the chat. But yeah, otherwise,
yeah,
if Rich,
so thanks for me. I can't get my camera up, Craig. You need to allow me to be seen.
Yes, I accidentally pressed that. Sorry.
Had enough of looking at me.
You should be able to start now. There we go.
There you go. Right. Well, I guess final words from me is well, thanks for joining. Thanks for the questions. So we can't cover every single question and every sort of small detail, but hopefully it's given people something to work on. Go and think about it over the Christmas period, and hopefully we'll see a lot of you guys in February.
Awesome stuff.
Brilliant. Have a great Christmas. Have a good Christmas, Craig, and a happy New Year.
Reg,
And
thank you very much.
See you all soon.
See you soon. So yeah, as Reg goes, I'm gonna stay on for just 2 minutes to answer a couple of questions. So there are a few that I just want to answer. So let me just pick a place to start here. Can we have the all 3 edge courses? We do have a deal for that, Christian, if that's just what you want. Email info@axifutures.com. I may actually be able to give you a little special on that, but yeah, if that's all you want, then just shoot me an email. You can get info@axifutures, and I can hop on a call with you or give you some more information on that. How long do you have? Okay, I think I answered. Access for that exclusive is lifetime. So, oh, Jose says he's enrolled for February. He picked the volume profile as the edge course, and he's loving it. And he says it's 100% worth it. So awesome to hear that, Jose. I think I put it on that you can only chat with hosts and panelists, but I'll make it so that anyone can chat with anyone. So if you want to say that for everyone to see, that'd be a great little plug. But let's see what Tony says. Tony says you may have to answer, but can you do the career program? But yeah, Tony, you can do it at your own pace. If you want to go through it like that, then 100%. And like I know that we are leaning towards making it where we just have regular streams going. So like so we basically, instead of having it as a 6-week set time, I think in future we may make it so that it's just every week there's a couple streams going where if you want to tune in as a career program alumni, you'll have access to it. You'll be able to tune in, and Richard goes through, say like in January, first 2 weeks, it's going to be week 1 on profile and next week on order flow. We may start rotating it through the different modules so that you can at any point jump into sessions. And if you're doing it at your own pace, then that makes it super convenient for you. The Delta One software. So Christian, during the course, then you'll have access to Delta One and our Discord. And once the program finishes, if you want to have monthly access to it, it's definitely under $100. And there's also a deal like if you want to take it for a full year, I think you also get like 10 or 20% off. So, but you'll hear about that after the career program completes. But that's effectively covering your news terminal, your community. You've got trader positions. It's an amazing package of software that we've put together. Andreas, if I were not in a similar training, you'd grab an offer. So Andreas, yeah, if that training doesn't work out for you, I hope it does. But if it doesn't work out for you, give us a shout, info@Axie Futures, or you can shoot me a mail, Craig@Axie Futures, and I'll see if maybe we can do you one better. And Tony, in the US, yeah, Tony, if you can't make it for the live streams, no worries. We've had people in Australia, in China, in West Coast of America, like just going through the program, and yeah, like you have everything recorded for you. So if you have any questions, you have the community there. Richard basically gathers all the questions that have come through, and then he puts them into the live session and makes sure he covers whatever you've asked. And if he misses one of your questions, you pop it in the Discord, in the Q&A area, and then it'll come through in the next session. In another time zone, yeah, a lot of concern about the time zone. I know it seems like you want to be there live, and sometimes it's actually nice to even just watch the recording, because if you're someone like me, for instance, I like to watch things at 1.5 times speed, 2 times speed, and I sometimes struggle to listen to people speak at normal pace. So if you're a bit crazy like me, it's sometimes nice to watch the recordings. I like to sometimes wait until the live is done, and then I watch the recording just for that purpose. But yeah, like everything's recorded for you, and you can do the program at your own pace. Or if you want to tune in live, tune in live. there is something nice about it. Everyone, like a cohort of people going through the program together, that creates this community team spirit, like you're going through each module all sequentially together. And we find that does push people to kind of like stay in tune with each other at the same pace. So that is a nice component of it. Anderson, how can I do it if you don't speak English? So we are looking at implementing an AI subtitle component. That's something that we're looking at doing in the new year. So I can't make any guarantees about that. My other recommendation would be use an app like Otter.ai. It's like a transcribing app that can basically listen to audio and transcribe it for you. I know a couple of people have done that before. And Cathal, where will so if this will be recorded? So Cathal, yeah, just if you had issues